This radio show is a paid placement. Welcome to Wealth Michigan with the McIntoshes. I'm Mark Elliott. Mindy McIntosh, the founder and president of McIntosh and Associates. Mindy started the company back in 2004. Nolan McIntosh joined the team in 2018 after his successful physical therapy and athletic training world with his master's and doctorate and all that he's got. He joined Mindy, and he's here to help you in the market world. They'll team up, helping you really to create your retirement plan, because it's really about the dream-focused wealth plan when it comes to your retirement. So you've got a discovery meeting. You sit down and they analyze where you are and where you want to go, come up with a solution, implementation. And then once the plan is put in place for you and you ride off into the sunset of retirement, that's not it, because things happen in our lives all the time. It's always being updated. So think of the Dream-Focused Wealth Plan as a living, breathing document based on you and your situation. If you'd like to find out more, it's 877-222-8849. We'll give you that number throughout the program. There's no cost, no obligation. Team's here to help, just don't know if they can until they hear from you. 877-222-8849. Of course, you can always go to the website. Some great information there as well. wealthmichigan.com. wealthmichigan.com. How you guys doing today? We're going to talk a little March Madness right out of the gate. And I know Michigan State's your team, and I know you probably remember fondly Chris Webber calling timeout against Carolina since he was a Michigan guy. But we're going to talk a little March Madness. And we know Tom Izzo and the Sparties have been phenomenal. How many national championships? Do you know off the top of your head?
Well, him personally, 2000 was the one he got. He's gotten to the Final Four tons of times. He's called Mr. Final Four. Can't close the deal. So
you're saying he's Bobby Stoops of basketball, the big game Bob, winning the national championship in his second year with OU, I think, in football, and then get back to the playoffs and never went on. But Bob Stoops, fantastic.
Those Final Fours, though, that's amazing.
It is. Bob Stoops. I care. I'd have Bob Stoops be my football coach anytime. I would have Tom Izzo be my basketball coach anytime.
Yeah, we went to one Final Four. Well, actually, they made the final game against North Carolina. This was back in 2009. And it was actually in our hometown. Well, not hometown, but it was in Detroit. So it was in their backyard at Ford Field. So Mindy and I went. The first basket, I'll never forget it, was Sutan was the guy that made the basket. We were down by like 20 points after that. So that was our experience.
Exciting.
It was
It was
exciting.
awesome.
You were ahead. You were
awesome.
leading in the Final Four. You can't beat that.
When we went to that Final Four game, I was pretty pregnant.
You were,
with a big
that's
old
right.
T-shirt on.
Yeah, that's right.
It was
that's
fun.
Right.
It was fun.
Yep.
We're kind of comparing March Madness to retirement, I think, if you think about it. I think, Mindy, that people, we talked about 70% of people have a written retirement plan, that most kind of go, look, I think I've got enough. I think I've done enough. I think I'm okay. I think we're going to be okay. And they never sit down with a retirement planning firm like McIntosh and Associates. Why?
Well, sometimes I think it just becomes a little bit either overwhelming, number one. So some folks that we meet with, they're just like, we just didn't know where to go or where to start, or what if we don't know the right questions to ask, or do we even have enough assets to, come in and talk with the team? So some of it is those different variables. Other factors might be just they're working and raising children and being with family members and running their everyday life, that it's kind of one of those out of sight, out of mind, not retiring tomorrow. Hey, maybe contributing to their retirement account at work, or not too worried about picking healthcare yet. So there's no sense of urgency, let's say. So I think it's so important that from any of those realms that you're at, all the way to another spectrum of, unexpectedly losing a loved one and becoming a widower, or being a single person, not sure, wanting to go it alone, I really encourage all of you to set a discovery visit with myself or a member of the team, because the planning portion is so important. Let's just find out what it is that your questions might be. And I'm pretty sure that we'll have a fun time and find out, and we'll dig in a little bit of what's important, to you folks that are listening, and we might bring some things to the surface that you wouldn't have necessarily thought about, and how we can walk through it together. And, in my opinion, this is very fun to do, but we can kind of lighten, things that they maybe didn't know what to look for, what to ask for, what does retirement look like, and are they on the right track today, even in what they're doing for saving and spending and inflation. So look at our website at wealthmichigan.com, or call our office here at 877-222-8849, because whatever your questions are, what your concerns, your reservations, don't wait. I would say, the time is kind of now to at least make that first step.
So, glad you're with us today for Wealth Michigan with the Macintoshes, Mindy and Nolan. I'm Mark Elliott. We're talking a little NCAA March Madness and kind of comparing it to retirement. And Nolan, I think you would relate with this. You're a former athletic trainer. You've been around the athletic world for a long time. And there's no question, Macintosh and Associates aren't going to guarantee you a successful retirement. That we don't know where you are, right? But we certainly, I think we'd all agree, we think you make better odds for yourself if you actually sit down with a team like Macintosh and Associates, because now you have a little bit better feel for where you are, a little more clarity. So here you go. We all know the song that starts, once the national champion is there, the one shining moment, right? So the team that wins obviously has talent. They have a game plan for every opponent, 6 games, I think, to win it all. Endurance, because playing 2 games over a 4-day weekend can be a grind for sure. And then, of course, you need the right coach. So if you're going to take those, talent, a game plan, endurance, the right coach, how would you take that into the retirement world?
Yeah, so I mean, it's great that we have the analogy that we can use this and say, if, our talent, we would kind of equate that to, where our income is coming from. So we need to have an income plan. If we don't have an income plan, if you don't know where your talent's coming on from a basketball team, then do we just start everybody, or how does that work? So we have to know where our income is coming from. So we have to know who's on the bench to come in, who's our starters. So that's where we look at things and say, okay, what are we going to use to supply our income needs that we need for every day? As far as, the game plan, you have to have a strategy, right? You can't just go out there and say, oh, if you're playing basketball and this team doesn't shoot very well, well, maybe you play a zone against them. Well, if they go down low really well, maybe you're playing man-to-man. So how do we have a game plan? Where's our strategy going to come from to be able to create income and also, from a wealth strategy standpoint, create something that you need for liquidity? So we need to have a strategy on where income is coming from, where your wants and needs are going to be separated, and how we use that strategy to help you get through those retirement years. And then, we talked about endurance, right? We know in this day and age, inflation being one of those big things that we're looking at, we need to have a longevity plan. We have to put things into place to say, okay, are we going to run out of money? How do we not run out of money? And so that's how we have to have a long-term longevity plan in there, because if you're only good in the game for 2 minutes, you're probably not going to win the game. So we want to make sure we have a longevity structure in there. And the fourth thing, the right coach, right? We love Tom Izzo, and he's been the right coach for a lot of the players that came through the system. But if there's a different coach at Michigan State, maybe he's not getting all those things done. So we're talking about you need the right professional for you. So Mindy and I, we really believe our niche market is the people that are in that semi-retired and retired age. Not that we can't work with others, but we just really believe our skill set is set for those types of clients, because we know their strategies are much different than somebody that's in their 20s or 30s where they just need to grow their assets. They're not worried about income, right? They're working. So we really believe we are the right coach for somebody that's in that niche market. So if that's you, please give us a call at 877-222-8849. Love to go through the game plan strategy just like we are through March Madness.
So let me throw in another one for you, because we certainly know that the excitement of March Madness really, we've had one 64 seed beat a 1 seed in the history of the tournament. It doesn't happen very often, but there usually are upsets. And I think it's usually the 2-16, that happens more often. The 3-15 matchup happens more often. What would you equate in retirement world upsets to, Mindy?
One of our widely sought out upsets, you could say, with either you looking to retire to help a loved one, or just things that happen along that working or retirement journey, is your health care. Whether it's health insurance, your personal health, your Medicare journey, life does throw us upsets just like these ball games that we see in March Madness. And one thing that we need to look at is, how are we protecting medical inflation? How do we protect the premiums that you are paying throughout maybe even a working cost share or retirement years of the health insurance? And then what's coming out of your pocket? If you wind up in the ER and have some hospital observation and an unexpected surgery, those are tens to thousands of dollars. And a lot of times your plans might have anywhere between $4,000 to $8,000 of exposure. Well, some of you are very well equipped to have that in the budget and know that it's there for not only if, but when these unexpected expenses come up. We wildly can be thrown curveballs of falling ill. And when you fall ill, it kind of crumbles your whole family a little bit, especially depending on how that outlook is. And now you might be on a medication that's well over $1,000 a month. So I feel it's really important that we actually take a look deep and plan through a portion of your financial journey, which even can create some guaranteed income, even through an annuity, to help offset the costs of healthcare as inflation goes, with us protecting you. So call us here at the office at 877-222-8849, and let's set up that healthcare game plan now.
There's no cost for this either. 877-222-8849. You think of all those topics that Nolan kind of equated all those coaching terms to. When you think of all of that, talent is income. Game plan is strategy, endurance, longevity. Your right coach is the right financial professional. Upsets healthcare. Those are a lot of moving parts we have to think about in retirement. The team at McIntosh & Associates here to help. 877-222-8849. We're just getting started today on Wealth Michigan with the McIntoshes. We got a lot to get to. Stay with us. We're back right after this.
All trademarks or trade names used or mentioned are the property of their respective owners. Mindy McIntosh nor McIntosh & Associates does not intend to state or imply any affiliation with or endorsement by such owners.
Who will help you get there? Wherever you want to go and whatever you want to do in retirement, McIntosh & Associates can help you get there. You do the dreaming, they do the planning. It's your retirement, but you need a guide. As you approach retirement, McIntosh & Associates can make sure you're on the path to retire on your terms. And once you're retired, they'll help you stay on course. Think of it as a roadmap for your retirement. The team at McIntosh & Associates wants you to have the retirement you've worked so hard for. Come in and meet with them today. They'll help you create a retirement roadmap that's tailored to your dreams, your lifestyle, and long-term financial goals. Call today at 877-222-8849 and schedule a visit. Call 877-222-8849. That's 877-222-8849. Firm offers insurance services. Investment advisory services offered only by duly registered individuals through AE Wealth Management, LLC.
Get started today to develop your own dream-focused wealth plan with the team at McIntosh & Associates. Schedule a complimentary first visit today. Call 877-222-8849.
Glad you're with us today for Wealth Michigan with the McIntoshes. Mindy and Nolan, I'm Mark Elliott. You can always find out more about the team by going to the website, wealthmichigan.com, wealthmichigan.com. If you have any questions or concerns, maybe Mindy or Nolan has talked about something today that you're like, well, I'd like to know more about that. Well, you can always give them a call, 877-222-8849. There's no cost, no obligation for this. Or maybe they haven't talked about something that you do have concerns about. Well, even better reason maybe to call the team, 877-222-8849. We're going to talk about the next two segments, Mindy, something that I know that you really enjoy, but I'm not sure our listeners love the topic. So I need you to convince them that this is an important topic for the next two segments. We're going to talk life insurance. Now, here's the deal, though. Now, in 2020, more than half of all Americans were covered by some type of life insurance, which means, a good number of people see the life insurance as a useful tool to help protect their families and loved ones. We're not going to pose the question, though, do you need life insurance? We're going to pose the question, do you need life insurance for your retirement? Does that change the answer a little bit, Mindy?
It sure does, because I think the very first thing I want folks to listen to is don't just hear the word life insurance and you're thinking, oh, who needs to buy another insurance product? I want you to realize there's a new look on life. So in retirement, number one, do you normally need the same amount of life insurance during your working years, raising a family, paying off debt, college debt, mortgage debt, and so on and so forth? No, you normally do not need that type of life insurance in your retirement years. You won't need as much. But a lot of times, we are now looking in more of your final needs categories or your goals categories. So if you're looking to say, hey, I want to leave a legacy to my children, or hey, I want to leave this kind of segment to them, the very best way to do so, in my opinion, is through life insurance. And the reason to use life insurance is it's as an asset to pass to your loved ones tax-free. So this way they can utilize those funds. And there's ways to say, listen, if you have X amount of life insurance, maybe you don't need that much to pay your premium for anymore. Let's go ahead and look at doing a conversion or a new look on life through a plan called an index universal life, so that we can actually draw down and do a tax plan, draw down some IRA funds, prior to you being required minimum distribution age, pay the taxes at today's lower rates and taxes, convert it to, generally speaking, growing tax-free to take either income for yourself or pass tax-free benefits to your loved ones. This helps with the stretch rule. It helps to pass for final needs and looking into not only a tax plan, but hedging inflation. And we all know there's market volatility right now, so this gives you some more guarantees inside of looking at it this way with utilizing investment dollars or pre-tax dollars to fund this tax-free route. If you haven't heard of this type of planning before on this holistic vision, we'd love to have a visit here with you at the office. Go to welshmichigan.com, schedule a visit with me, stop by our office here in Freeland, or call 877-222-8849. And let's get this needs analysis or even this tax plan in your hand to educate you more on this type of life insurance.
So, Nolan, could you expand a little bit more on, because Mindy brought up the Stretch IRA. Now, that's something that changed in the year 2020 with the Secure Act, where the IRAs used to be, so if you're leaving it to, say, your 40-year-old daughter or son, or both, and their life expectancy was 85, they had 45 years to take some out each year, pay a little bit of the taxes that they had to pay on it. Mm-hmm. Now, it's a 10-year window. If you leave $1 million, your kids have a 10-year window to pay all the taxes on it. You really can create a big tax burden, can't you? Can you explain that a little bit? I guess the end of the Stretch IRA?
Yeah, exactly. So anybody that had prior to 2020 was, had a beneficial IRA, they call it, they still can use those grandfathered rules, they call them. And so you can still stretch it out. But anything that, so let's say your loved one passed away after 2020 and you are a non-spouse. So somebody that's non-spouse, if you're a spouse, you can just roll it into your name if you needed to. But if you're non-spouse, we used to be able to stretch it out over the life expectancy, like you said, but now the government said with the new Secure Act, which we thought was a great idea because they increased the age to 72, where the government starts requiring you to take funds out of anything that's in a pre-taxed entity. What they attached to that rule was that they said your beneficiaries now have only 10-year time frame to draw that off. And so that sometimes becomes a tax strategy that we're working with clients all the time on. Because usually they're in their higher earning years and they have 10 years to draw it off. And so that's the crux of it is you don't want to wait till year 10 to draw it off. You don't want to wait. You don't want to do it all in year 1. You probably want to start piecing that out year by year until that 10-year time frame is done. So that's why, life insurance can be a chassis to that. The other thing that we're looking at, and they've just talked about this as part of the, some of the plans in the current administration, is they're talking about doing away with Roth conversions. So if that was one of our tax plans that we were trying to do with clients prior, now we can still do those, but what if they take that away? They have not talked about doing life insurance. And so if we can do a tax play to where we're doing an indexing universal life policy, they have not talked about taxing life insurance policies. So that's another good reason why we want to look at doing some tax plays on that and creating less of a burden for the people that you leave behind. I don't think a lot of people don't realize this. Sometimes they say, I don't care, what happens. They're going to be happy to get the money when I'm gone. Well, I don't think you really would be happy that, the government's getting most of that money instead of your beneficiaries. So that's why we're trying to help as many clients as we can to get their beneficiaries in a better position. So love to be able to work with you and talk over those strategies. 877-222-8849. We also have some things on our website, wealthmichigan.com, that you can go to that give you some good resources on talking about how we look at life insurance from this standpoint.
So, Mindy, and this is my uneducated theory, is that the insurance world has been pretty forward-thinking as it comes to the retirements of baby boomers and the challenges that they face. A lot not having pensions, and then you talked about the living benefits that we have, the ability to use some of our death benefits. So if we had $1 million death benefit and we ended up going into a long-term care facility and you use $200,000 of that, well, you still have $800,000 to leave behind. So it does deduct from your death benefit if you end up using some of that money or you take a loan on your life insurance policy. And Nolan talked about the fact that life insurance has really changed. Let's say you had a life insurance policy from before the year 2000 or even the year before 2010. We know stocks and bonds and mutual funds, ETFs, it's easy to shuffle, right? Life insurance policies, that seems to be a little more complicated. Can we change an old life insurance policy to a newer one, or are we stuck with what we have? How does that work?
You sure can. So with the folks that have had those policies for a while, life insurance rates have gone down. Obviously, there's no innovative strategies to utilize. So most often we take a look at life insurance as something you have to purchase with good health or fairly good health. So we can look at doing a conversion. If you have cash value in a whole life or an index life policy or a variable life policy, we can move the cash over into the new innovative plan that's going to work more for which you're looking at in, today's environment. We can also look at if you've been buying a term insurance. This week alone, we had 4 calls of their 20-year term policy was going to be able to be renewable at 4 times the premium amount they were paying prior. That's why it's so much better if we review in there, even if we can talk to you prior to getting that rate increase, then we can get out of the term policy, end that upon approval of, an index universal life that now you have, if you live to be 105 years old, you're still going to have the life insurance. The premium doesn't change. So you don't have to worry about, oh goodness, is this in the budget now? Should I keep this going? And what about that 20 or 30 years already paid into this for nothing? So it's so important to make sure that your dollars are working for you, your loved ones, your grandchildren, and future generations. So reach out to us here at the team to take a look at that. That second opinion is really important to protect kind of your life insurance and your retirement savings as well. So you can reach out at 877-222-8849, and let's see what we can do for your future.
So certainly life insurance has the benefit of leaving tax-free money behind to your heirs. And the other part, Nolan, that Mindy was talking about, and you brought it up as well, when you think about the long-term care, it's not the old long-term care world anymore. Now you can do it through life insurance, and it's a living benefit. But Mindy brought up the fact that you do have to have relatively good health to be able to get a life insurance policy. If somebody really likes the idea of using insurance for long-term care, for example, and their health isn't good, is that kind of where you could slide them into the annuity world? Because the annuity world is just buying it, right? And you can kind of create that?
Yeah, that is true. I mean, that we could. It may not become tax-free to them. That's the other caveat to that, right? The annuity would have to go into, depending on what we're doing with it, either go into another IRA or a non-qualified account, things of that nature. But if you're not healthy, there are options to give you some protection and give you still some asset planned long-term care protection in there. It's just we might not be able to make that tax. We're trying to do 2 things with one stone, right? We're trying to create a more taxable, favorable environment for you and give you some long-term care protection in there. And if we can't go the life insurance route, then it solves one of the puzzles, but it doesn't necessarily maybe solve the other puzzle on the taxation plan there. But still, there's some other ways we could probably work around it, and that's why everybody's plan that we see is so different. That's why Mindy and I love it. It's a puzzle, and we're master puzzle putter togethers, I guess, if you want to put it that way. We love to be able to piece that together, and Mindy and I love to be able to work together and make sure that Dream Focus Wealth Plan entails everything and does everything that we can do for that client, because if you don't, then you're not serving the client. And Mindy and I's mantra is really we want to serve the client in our best knowledge and ability. We don't know everything, and we try and educate ourselves as much as we can by taking a lot of different education courses and continuing our education, but we really like to walk through those processes with our clients and make sure that we're doing what's best for them. So 877-222-8849, and again, the website is wealthmichigan.com. A lot of resources over there as well for you to look at.
So there's obviously a lot of moving parts in retirement because we need income to replace the paychecks. Are we going to invest at 65 like we did at 35? Maybe. Everybody's situation is different. That's why when Nolan and Mindy and the team at McIntosh & Associates sit down with you, it's all about you, your hopes and dreams. And then taxes. We know taxes are probably going up. We know Trump's tax law finishes at the end of 2025, and in 2026, everything reverts back to the 17 rates and brackets. The Biden administration certainly talked about raising taxes as well. So this is a moving target here. You need a plan for it going forward. It's not looking in the rearview mirror like you do every April. It's looking through the windshield where you're going to be in 5, 10, 15, 20 years down the road. And then healthcare, long-term care. Number one reason that people file for bankruptcy is a health issue that they didn't have the coverage for, and it just put them in a bad spot. Legacy, estate planning, Social Security, Medicare. There's a lot of moving parts. And as Mindy and Nolan have said, it's 877-222-8849, 877-222-8849. More about life insurance right after this. Stay with us.
Of all the questions you get asked every day, this is one you shouldn't ignore. how much money in your 401k or IRA is actually yours. Not what its current value is, but how much of it will end up in your pocket, not the government's. Remember, you still might owe taxes on that money. Make sure you aren't overpaying. Keep every dollar you're entitled to. Look, I know it's confusing, it's complicated, and it's definitely not fun. That's why at McIntosh & Associates, we work with tax professionals to help make sure you aren't paying more in taxes than your fair share. It's your money. You deserve to know what's at stake. Call our team at McIntosh & Associates today. Get started. 877-222-8849. 877-222-8849. Don't do the IRS any favors. 877-222-8849. Firm offers insurance services and may not give tax advice. Investment advisory services offered only by duly registered individuals through AE Wealth Management, LLC.
Schedule your complimentary first visit with the Macintoshes right now. Call 877-222-8849. That's 877-222-8849.
Welcome back to Wealth Michigan with the Macintoshes. Mindy is the founder and president of McIntosh & Associates. Started the team back in 2004 after graduating Michigan State in 2002. Nolan joined the team in 2018. The grad of Lake Superior State University, a doctorate from Andrews University in physical therapy. So Nolan had another work environment back in the day, now part of the team at McIntosh & Associates. And Mindy and Nolan love sitting down with people and trying to figure out the puzzle, really. You think of what is the key to putting a puzzle together? Well, it's the picture on the box. That's how the retirement plan starts, the Dream-Focused Wealth Plan. It's about what is your picture of retirement. Now let's see if we can create the tools you need to be able to live confidently and have some clarity with your retirement. There's no guarantees. We all get that because life happens. Again, it's 877-222-8849 if you'd like to chat with the team. You can always go to the website to find out more, wealthmichigan.com. We're talking about some key questions you really need to ask yourself to try to determine if you still need life insurance in your retirement years. So the question, do you need life insurance, is one thing, but do you need life insurance in retirement is a different angle on this question. Now, one of the life insurance options we hear a lot about, Mindy, and Nolan even brought it up, I think, in the last segment, is indexed universal life, or IULs. What is an IUL? How does it work?
So the nice thing about indexed universal life is it has a couple of different components to it. You can pay one premium, which is monthly, quarterly, semi-annually, annually. We can do a 5-pay. We can pay into it for 7 years and so on. What it does is it does produce you a death benefit. So a portion of your premium for the policy goes into more of like an annual renewable term, but it's good for your lifetime as long as you continue paying premiums. The other components that it gives you is having the opportunity to participate with an index opportunity. So you're participating with what, a market index is actually returning, but you don't have any negative impact, meaning you cannot lose money due to market volatility. Some of those even give you a small guarantee as far as growth rate, but you're protected from any loss, and the income that it can be building from the index that it's increasing in the policy can actually be pulled out tax-free. So you're going to be able to pull it out as a tax-free, what they call a loan in the life insurance that you can actually utilize for income during retirement. So maybe this is your pension plan. And if you're listening and you're like, I don't have a pension, this could be for me. So it could create a pension-like income. It's also very good to utilize for some college funding, to pull some money from the cash value for college funding. You can use it for maybe a first house, helping with a wedding, or using, yourself as your own bank to borrow from. But it gives you a lot of opportunities. And not only that, but some people are really looking for long-term care insurance, and we can use this as an alternative using an asset-based care instead of buying traditional long-term care insurance that you pay a monthly premium for in hopes that you never use it. We can actually go asset-based and carve out a portion of your plan that says, hey, you have X amount of dollars. You have $400,000 to use just for long-term care. Maybe your average stay is 4 years, and this would be covered through your policy. If you never go into the nursing home, then you have this death benefit and all these tax-free great opportunities inside of the plan. So you don't have to worry about a term policy you paid for a number of years. Rates goes up significantly. Your health has now changed. This is actually something, once you purchase it once, it gives you a lot of flexibility. I'd love to talk to you more about it, show you the components and how that works. Schedule a visit here at our office on wealthmichigan.com. I do have some outlooks on life. It's called the New Look on Life on there. You can click through some of those tabs or call us here at 877-222-8849 and let's run through what are the pros, what are the cons, what are your questions that we can actually talk through together.
I like that. Pros and cons. So let's talk about that, Nolan. You think about it, there's three worlds of money: the banking world, the insurance world, the investment world. And there's pros and cons to every single tool you could put into your retirement tool belt. What are some of the pros and cons of an index universal life policy?
Yeah, so I mean, the pros are particularly currently, right, with inflation being, really high as it is currently, it's indexing. So you have an opportunity to hopefully increase the return on your cash with the indexing tools. And that's why we talked about in an earlier segment is the index universal life, the categories that we can go into, the indexes that we can go into have changed significantly. You can actually get a better return than you could in the past. The other thing is you have some tax-free capital gains there, right? Instead of putting it into, we talked about it before, if we had to put it into a non-qualified account to give you some long-term care, well, that's still taxable to you if you had to use it. And so the other issue is that this becomes a non-taxable entity that you can use for long-term care or even for income. Another thing is right, if you take income out, usually you can get a higher taxable Social Security, right? So we don't want to tax Social Security more than we have to. So there's a possibility that we could lower the chances that your Social Security starts to become a little bit more taxable. And then obviously there's a death benefit associated with it, right? So you're living, heirs that get this get a tax-free benefit on, your passing of this. The cons are obviously there can be some caps on some returns. Obviously, it's indexing, so the insurance company itself is going to keep some of them so that way they can give you a guarantee that you can't lose anything on this money. And so there are some of the caveats there. No guarantees, right? So yes, you have potential to increase your return, but there could be a year where it's negative and you get a zero. So you could have a possibility there. And then obviously there's some fees and costs. They get confusing. And Mindy, she's our life insurance guru here, so she would be able to talk a lot more about the fees and indexes that go into those, but it's one of those things that sometimes they can get costly, but a lot of times, like we said, it's worth it just because long-term care component in there. If you were paying for a long-term care insurance itself, it continues to increase its premium as you get closer to that age, and a lot of times it's still more beneficial to use a long-term care asset-based plan instead of paying outright for a long-term care insurance product.
So, Mindy, I think there's so many moving parts when it comes to putting a plan together, the Dream Focused Wealth Plan that you and the team at McIntosh and Associates do for your clients. One of the challenges I would think is sometimes we don't think about, life insurance, we're 50, we're 55, we're 60, we're 65, we're just going into retirement, we're in great health. We're not thinking about when we might not be in good health. And so this is not an area where you can wait until you're 80 and, boy, I don't really feel as good. I better get some life insurance. The cost would be prohibitive maybe to some degree. This is something that we should do younger. Am I off base or kind of in the ballpark here? I mean, maybe we ought to start thinking about it when we're putting a retirement plan together.
I think it's really important to think about as we're looking at putting a retirement plan together and just thinking about where your income is going to come from. So it's a great position to look at where are we actually going to draw income. And the younger that you are when you purchase life insurance, the less the cost of insurance is going to be. However, we've done a lot of tax plan within the life insurance, especially over the last 2 to 3 years. So a lot of times it's just moving pre-tax dollars into that estate or that tax-free equation moving forward because of the new 10-year rule. So either way, I always encourage folks not to wait. I mean, Nolan and I and even our children have had Index Universal Life. The kids since about a month old each. Nolan and I for probably the past 15 years or so. So yes, it gives us more opportunity for the cash value to grow. We were young, so we got, those preferred ratings, and it is helpful. And we really need to establish for all of you, even if you're currently working, what is your expenses and what are you earning for income and how might that change? How are the raises going to come? How many years are you still looking to work? And then we filter in things like, prices at the fuel tank right now, gas, inflation. So it's really important. If you do not have a written income plan, let's take a look at it. Life insurance may be a component of that, and it may not be, but let's have a visit to actually walk through how different particular factors throughout your lifetime will help you. So call us at the office here at 877-222-8849. Let's have a visit. Let's get a written plan together and build upon that.
And another thing is that a lot of people, they're working and they say, well, I have life insurance through work. Well, that's great, but what happens when you're done working? That life insurance goes away. So even though you might have life insurance currently, we need to look at that too. What are your future needs that are going to have to be happening there for you to have life insurance possibly when you're done with work? So that's another thing that we look at. A lot of people, they kind of get stuck in their mind what I currently have instead of what I need to look at futuristically. And so I think that's a big component too, is we have to make sure that Mindy and I call all of our clients, we don't do reviews anymore. We call them strategic plans. Because we, again, want to look not to the rearview mirror, right? We want to look forward and look at a strategic plan looking forward and how do we better serve our clients? And if you have life insurance needs that are not going to be met when you're done with work, then we should probably start looking at that now and start funding some of that possibly before you would be done with work instead of waiting until you're done with work. So that's a big thing. And like Mindy said, the number here is 877-222-8849. Love to walk through that with you guys and anything that you have questions on.
So you think about it. There are a lot of different tools you could put in your retirement tool belt in the investment world. Same goes in the insurance world. How do we put these tools together in the different worlds, including the banking world, to put ourselves in a better position when we get into retirement? So the Dream Focused Wealth Plan, the discovery meeting is where it starts. That's really to find out about your hopes and dreams and bucket list. What do you want to do? And then figure out, okay, where's your income going to come from? What about our investment strategies, tax-efficient strategies, healthcare, long-term care, legacy, estate planning? What about Social Security? It's in the income part. What about Medicare? It's in the healthcare part. These are big, big questions and big decisions. You need to make an informed decision, not just kind of wing it and look at each of these things in a vacuum. Put them all together and let's see how we can come up with a plan. The Dream Focused Wealth Plan at McIntosh & Associates might be right for you. It might be a great fit. You might not. Don't really know until you reach out. 877-222-8849 again is the number. No cost. 877-222-8849. You can always find out more on the website, wealthmichigan.com. Back with our final segment with Mindy and Nolan. This is Wealth Michigan with the McIntoshes.
To learn more about the team at McIntosh & Associates, check out their website anytime at wealthmichigan.com.
Glad you're with us today for Wealth Michigan with the McIntoshes, Mindy and Nolan. You can always find out more about the team at McIntosh & Associates by going to the website wealthmichigan.com, wealthmichigan.com. Some great information there. You can always give them a call if you have questions or concerns, 877-222-8849, 877-222-8849. I'm Mark Elliott. Our final segment's always a short one, so we always come up with a little topic. Mindy and Nolan get together and brainstorm these for weeks on end, trying to figure out where they're going. And I think it's really that's always a fun segment because sometimes we talk about their daughters. And we do a lot of different things. Mindy, where are you going today?
Today we're going to design your fiscal house, Mark, to weather any elements that may come up.
Okay. All right.
And, realistically, when we're designing your fiscal health and house, I thought this was a good one just because the housing industry, here where we live, a house isn't on the market for more than a few days and it is sold. It is gone. So I just think it's pretty relevant and we need to start a strategy. So when we're talking about your fiscal health on the financial side, what is your strategy? Well, we want to build a home for you to start with a full set of constructive drawings, right? Just like you're looking to say, hey, I want to purchase the house with that pole barn, or I want a pool out back. And likewise, a financial portfolio should comprise of your foundation. We need to have walls, of course, a roof, and maybe even some fencing if you do have that pool. How are we kind of consuming and making sure it's all put together? Well, when we design your fiscal health, you must begin with that foundation. Without a strong foundation, that house might crumble. And we see too many folks that are in their working years or coming into retirement and they haven't built the foundation. We need to start and have a plan together and to have a visit. You can see some of this on wealthmichigan.com. So the foundation is really your protected assets. So what's happening with your checking account, savings account? Do you still have some CDs? What do you keep protected as far as cash at home in your safe? And do you have any other type of deposits, governmental bonds? What do you have there through treasuries? And what about your traditional fixed or indexed annuities that are protected by the financial strength or the claims ability of the issuing company? So build that foundation. Where is that foundation? Where are those bricks laid? From there, once you build that foundation, let's get the walls set up. And the walls really are your first level risks. So corporate bonds, muni bonds, or hard assets like natural gas, oil, gold, silver, farmland. A lot of people have farmland or commercial real estate in this area. And then maybe you have a real estate investment trust. So build those walls. Now we got to put a roof on. So the roof is the highest level of risk that those of you can tolerate. That might be your exchange traded funds, your options, commodities, your mutual funds, your stocks. And right now, a lot of you might be feeling like, whoo, this is definitely our risk aspect. And then fencing. How are we going to protect yourselves, your loved ones, and your goals and dreams? Make that fence all put well around there. If you do not have all of these steps set up and you're feeling like a little bit off kilter or a little off balance if designing your fiscal house for your investment and retirement goals, please reach out to our office. You can reach us here at 877-222-8849. It's a really important time. Protect your family, protect even some tax consequences that can come due. Assets and, there's funeral costs and, investment risk and inflation. So let's make sure that we have these strategies put together. And then on our next segment, when we join you next time, we can have a part 2 of building your strategies and, get into even more depth of this.
Yeah, and I think that's the important piece. And Mindy touched on it, the foundation. And you want a foundation that's solid. You don't want something that's... So some people have a foundation, but it's cracked. And so there's some things that we need to fix, from that standpoint. Maybe they don't have enough of a steady income coming in that we need to create some more, income for them. Or maybe, there's something else that we haven't even thought of, from that standpoint. But the foundation is cracked. It's better to take care of it earlier than it is to obviously wait for it until the foundation is crumbling. So, again, 877-222-8849. Love to be able to help with that foundation of the house. And like Mindy said, we're excited for the next time we get together and we'll talk about some more building on that foundation.
So you guys enjoy the rest of the weekend. Have a great week. We'll do the Wealth Michigan program with the Macintoshes next week. Have a great week, everyone.
McIntosh and Associates Incorporated is an independent financial services firm that utilizes a variety of investment and insurance products. Investment advisory services offered only by duly registered individuals through AE Wealth Management LLC, AEWM. AEWM and McIntosh and Associates Incorporated are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. McIntosh and Associates Incorporated is not permitted to offer, and no statement made during the show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by McIntosh and Associates Incorporated.